Baroda BNP Paribas Nifty200 Momentum 30 Index Fund. This fund picks the top 30 momentum stocks from the Nifty 200 index to invest. But is it worth adding to your investment portfolio? Let us find out in an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. But before analyzing this fund, let us first understand what is Baroda BNP Paribas Nifty 200 Momentum 30 Index Fund is about. So as an NFO, it opens on 25th September 2024 and closes on 9th October 2024. And some of the key features of this fund is it is an open-ended fund type which belongs to the category of equity large cap, and it has Nifty 200 Momentum 30 TRI as its benchmark index, and there is an exit load of 0.2% for redemption within 7 days. There is no entry load, but the minimum investment amount to start your investment in this fund is 1000 rupees, and the fund manager for this fund is Mr. Neeraj Saxena. And according to the riskometer, the risk involved in this fund is very high. And the primary investment objective of this fund is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index. But as it is an index fund, it is subjected to tracking error. Now let's understand the index it is representing, which is the Nifty 200 Momentum 30 Index. So this index aims to track the performance of the top 30 companies within the Nifty 200 selected based on their normalized momentum score. The normalized momentum score for each company is determined based on its 6-month and 12-month price return, which is adjusted for its daily price return volatility. And also the weight of each stock is based on the factor tilt methodology, which is the weight is derived by multiplying the free float market cap with the normalized momentum score of that stock. So stock weights are capped at the lower of 5% or 5 times the weight of the stock in the index based only on free float market capitalization. And this index can be used for a variety of purposes such as benchmarking, creation of index funds, ETFs, and other structured products. Now let us take a look at the sectors it is representing, which are automobile and auto components, capital goods, financial services, power, telecommunication, consumer services, oil, gas and consumable fuels, services, metals and mining, healthcare, consumer durables, information technology, realty. And the highest weightage is given to the automobile and auto component sector by a weightage of 23.62%, while the least weightage of 0.71% is given to the realty sector. And now let's take a look at the top 10 holdings that is represented in this index, which are the top 10 companies. So the top 10 companies are Trent Limited, Tata Motors Limited, NTPC Limited, Bajaj Auto Limited, Bharti Airtel Limited, Coal India Limited, Adani Ports and Special Economic Zone Limited, Bharat Electronics Limited, REC Limited, Mahindra and Mahindra Limited. The top first position is given to the Trent Limited by a weightage of 6.32%, while the top 10 position is held by Mahindra and Mahindra Limited by a weightage of 4.455%. Now let's move on to the statistics. As per the data, the returns as on August 30, 2024 of the index. As you can see from the tabular column and the graph represented here from the data gathered, that in 1 year it has produced a return of 68.91%, and in 5 years it has produced a return of 30.53%, while since inception it has produced a return of 21.79%. And as you can see in the graph that while in short term it may have dips here and there and it has little bit performed poorly, but in long term, if you compare it to the short term, it has consistently outperformed and performed well. Now, as we have come to a basic understanding about this fund, let us now analyze whether investing in this will be worth it or not by analyzing the pros and cons of investing in this fund. So let's start with the positives. So one of the key advantages in this fund is the momentum investing focus. Because this fund follows a momentum investing strategy which targets the top 30 stocks from the Nifty 200 index based on their price momentum, it is designed to capture stocks that are outperforming, aiming to deliver high returns as long as the momentum continues. Another advantage is the concentrated high performance portfolio. So So with only 30 stocks, this fund is highly concentrated, meaning it focuses on only on the best performing companies in the Nifty 200 index. So this concentration can lead to higher potential returns as the portfolio is built around strong performance. And another advantage is the systematic stock selection. The stock selection here is systematic based on momentum indicators rather than human judgment. This reduces human biases in the decision-making process, allowing data to guide the portfolio construction. And least but not the last, another key advantage here is the mid to large cap exposure. So the Nifty 200 covers a broad range of mid-cap and large-cap companies, giving investors a balance between growth potential and some stability compared to smaller cap funds. So this fund offers exposure to companies that have already established themselves while still having room to grow. So these are all the advantages you can get by investing in this fund. Now let's move on to analyzing the cons, which are the disadvantages of investing in this fund. So one of the main potential drawback here is the high volatility. So momentum stocks are often highly volatile. While they perform well in rising market situation, they can also experience sharp downturn during market correction period. So this makes the fund riskier for conservative investor who's not willing to take a lot of risk, even in an index fund which is only trying to replicate the index. So another potential drawback is the sector concentration risk. Since this is a momentum based fund, it can become concentrated in certain sectors if those industries are performing well. So this sector concentration increases the risk if one particular sector faces a downturn. And another disadvantage is the no active management present. Another major disadvantage is the no active management involved. So like many index funds, this fund is passively managed, meaning there is no active fund manager making real-time decisions to navigate the market's volatility. So the portfolio is rebalanced based on the momentum index, which can limit flexibility in time of volatile markets. Another potential drawback is a short-term strategy risk. So momentum investing works best in the short term as it relies on stocks continuing their upward trajectory. So if market trends shift, momentum stocks can quickly lose their appeal and the fund could experience a dip in performance. These are all the potential risks you might be undertaking while choosing to invest in this fund. So go through all these factors carefully before deciding to invest in it. So what is the final takeaway from our analysis on the Baroda BNP Paribas Nifty 200 Momentum 30 Index Fund? Is it worth investing or not? So this fund is designed for investors seeking to capitalize on high performing momentum stocks, but it comes with its own set of risks, including higher volatility and sector concentration. So if you have a higher risk tolerance and are looking for short-term growth, this could be a great addition to your investment portfolio. But as always, assess your risk appetite before making any investment. So that's why it's completely up to the investor, because they need to consider all the factors pertaining to their unique financial situation to see whether it will suit their investment portfolio or not before deciding to invest in this fund or in any fund. But our personal opinion is that if you're an ultra conservative investor who's not willing to invest in actively managed funds, because even as an index fund, it does have higher risk compared to an actively managed fund, it will have less risk. So if you're an ultra conservative investor who's not willing to invest in actively managed fund, then this fund might be suitable for you. And also there are similar index funds that have a lower expense ratio or a lower tracking error compared to this fund. So if you still want to invest in a similar index fund like this, then it's better you invest in a fund that has a lower expense ratio and lower tracking error. And also if you are high risk tolerance, if you have a high risk tolerance and you want investments that can beat the market, then you can invest in actively managed fund that has the potential to deliver higher returns compared to an index fund like this, because in an index fund it will only try to replicate the index returns as best as is possible, but an actively managed fund will be able to outperform the market itself. So before investing in anything, if you're struggling to make a decision because you do not have the sufficient time to research the market or you do not have the sufficient knowledge about the market, then you can definitely go for professional guidance through a certified financial planner who look at the suitability of the investment objective, risk profile, overlap ratios, allocation, and see if it aligns with your investment portfolio and your unique financial goals, and then suggest you and craft your investment plan that will be suitable to your investment fund portfolio to achieve your financial goals in a more faster and smarter way, making your entire investment journey simplified for you. So you can also invest through professional guidance as well.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.